Let's start with something very important. The very first thing you need in the market is your edge, your trading strategy. Without a strategy, you're basically gambling. A strategy gives you structure. It tells you when to get in, where to get out, and how much to risk. Now here's the truth. You don't need 100 different strategies. All you need is a couple of good ones. If you master them, stay disciplined, and stick to risk management, you'll put yourself way ahead of most traders out there. And in this video, I'm going to give you one of my favorite advanced morning setups. Let's break it down. Suppose the market is at this level, and based on your analysis, you're bullish. You want to take a long trade. The question is, how do you actually enter? That's where our strategy comes in, the pullback setup. But before we dive into entry and exit, here are 3 quick rules you need to write down. For the first 15 minutes after the market opens, use the 1-minute time frame. After that, you can shift to 3 or 5 minutes. The rules for entry stay exactly the same. Always respect your stop loss. No exceptions. Your minimum profit target is 1 to 2 risk to reward. Once you hit that, you can trail the stop to lock in more profits. Here's how the pullback setup actually works. You're looking for momentum. So, wait for 2 or 3 strong candles in the direction you want to trade. That's your alert. Next, wait for a small retracement, usually a candle of the opposite color. When the price breaks the previous swing high, if you're going long, that's your entry trigger. Your stop loss goes right under the pullback point. That's it. That little dip before the market continues is what we call a pullback. And yes, you can flip the exact same logic for a bearish setup. 2 or 3 red candles, a small green pullback, and then you enter when the market breaks lower. Let's walk through some real Dow Jones examples so you can actually see it play out. Here you can see the market open strong, back-to-back green candles. Then, we get a small red candle. That's our pullback. As soon as price breaks the previous swing high, boom, that's our entry. Stop loss goes under the pullback candle. And look at that. The move is so quick in the morning, our 1 to 2 target is hit in just a couple of minutes. Now here's something important. Not every trade will be a winner. In this example, we get the same signal. Strong green candles, then a red pullback. We enter on the breakout. But this time, momentum doesn't follow through. Price stalls, pulls back deeper, and takes out our stop. And that's perfectly fine. Losses are part of trading. The key is, we followed our rules, risk was controlled, and we moved on to the next trade. Strong green momentum, followed by a small red retracement. Once that swing high gets broken, we're in. Again, risk is small, and the move pays us nicely. Now let's flip it. Market opens with strong red candles. Then comes a little green candle, our pullback. The moment the price breaks below that swing low, we enter short. Stop loss is just above the pullback. And just like the bullish side, the momentum drives it quickly to target. Same rules, same structure, just flipped. Clean and effective. And that's the beauty of this setup. It works both ways. In the morning, momentum is usually strong, so your targets can hit very quickly, often in one single push. So now you've got the theory, and you've seen it in action with real Dow Jones examples. Practice this setup, test it, build confidence with it. And once you do, you'll have a powerful tool for trading the open.